Greetings. Keith Prather here with the NCM Automotive Economic Outlook. Let me share my screen. So this month was interesting, and I know I've said it across many of the videos that we've done lately that there's obviously a lot of fear and trepidation kind of in the market at the moment, but I think it's going to create some very interesting dynamics in the market. So this month, the index kind of eased a little bit, 2% lower month over month. It was about 1.8% lower year over year. We're going up against a pretty good February of 2024, so that's part of the issue. We know that unit sales have been a little bit stronger, approaching that 16 million unit mark, annualized sale mark. So we see some pretty decent signals out there, but there's also some fear. There's a little bit of concern. There's a wall of worry, as we like to say. We look at inventories, still kind of interesting, and this is a real moving target. I think inventories may be one of the big stories this year, ultimately, and when all is said and done, especially with what we know is kind of happening with some of the used market right now and some pre-sales as people try to get out ahead of tariffs. But right now, inventories from using just the inventory to sales ratio, still about 35%, almost 36% lower against pre-pandemic levels. You can see where we used to be at normal inventory to sales ratios, still a lot lower. Now, I know as I do presentations and I talk to a lot of you, you're kind of saying, you kind of roll your eyes and you say, "Wow, I don't know. That's not my dealership. My dealership is, right now running really heavy. We've got a lot of inventory on the land on the dealership lot." And I know that, I hear that. But when we look at it from a national perspective, still down. And I still drive a lot of dealer lots as well. And I still see big holes right out in the middle of the dealership. They still pushed all the inventory, right up along major roads facing it, but they're still empty. So it's probably hit and miss. I think probably market by market, region by region. But overall, it's kind of what we've got. They're 16% lower year over year. And I've noticed that a lot of used vehicle inventories right now just running about 40 days of inventory on hand. And I want to talk more about that here in a little bit, but let's talk about the overall economy for a moment. I just have one slide on this, but there's a lot of fear out there. There's a lot of people talking about recession. You see it in the press. You see what's happening with the stock market, and just that whole fear issue. And a lot of it's been driven obviously by just a lot of the transition process. The Trump administration kind of coming in, swinging heavy with Doge, also swinging heavy with tariff risk, and they're playing tough. And there's a lot of things that go along with that, but it's created this fear. And that's what's happening with Q1 GDP. The underlying economy is still very strong. It is still very strong, period. Okay. What's happened to us is that the fear momentum has created a shift in some purchasing processes that are really skewing GDP. So here's what's going on. We were moving along, the landed GDP was showing us at about 2.3% growth, trending through about, early March, and then all of a sudden it plummeted. This is what gave everyone the recession fear signal. This is what everyone was reacting to. They see GDP contract at a 2.8% rate, right? It just plummeted and it bounced along. And even if they don't pay attention to the detail, they're going to say, wow, right now, it looks like we're going to contract at 1.8% for Q1. And that's a true statement, but it doesn't tell the real story. Gold imports, right? Again, remember I said the fear factor, right? When you panic, you do things like you buy gold and you buy treasuries and you dive into all those safe havens. We've had a record volume of gold imports into the United States, both from our own Federal Reserve and then just individuals. Like, you go to Costco, man, it's one of the fastest growing items for sale at Costco are those little gold chips. And it skews GDP data. When we take imports and exports and we look at what the net difference is between the two, if we have a net import gain, it detracts from GDP, it pulls away from it. If we have a surplus in exports, it would obviously add to GDP. And right now, they're so out